if the bond was sitting at this price here, it shouldn't have went any higher than perhaps 161s. So when it goes above 161s, I'm already starting to think about that as being a premium to duration. So I took my first sell trade, made some money, scratched out the remainder. When it came back up to test the highs, this looked as if it was about the same. It really was about the same at that stage. And when it made a higher high and closed, it was actually slightly down. So that gave me a great opportunity to try it a second time. And down she went. The second adjustment here was obviously concerning. So when that started to turn back off that price at that point, I started to use that to start getting back into the short trade again to try and take advantage ultimately of what I believe to be a bit of an opportunity. Now, obviously, when we start drilling that down into the likes of the 5s and the 10s, we're asking the same questions. What does duration look like? The first sale looks like the best opportunity because the duration on the 5s and the 10s was diverging quite significantly at that stage, and we could get a bit of business done in this area here. The retest here was a little bit more problematic because we'd set a new lower low here, which meant we really had to be patient for that candle to start showing up on that uptick. Still a sell trade. The third trade, of course, looks on the face of it to be what? Would you all agree it looks like a no-brainer? It looks like a no-brainer. Because look at how much of a lift the 2s 5s is having. The 5s 10s. Well, if the 5s 10s is having that much lift, would you agree that the 2s 5s probably should be lifting as well? Probably, right? So if the 2s 5s is giving us a few problems, we can rely on the 5s 10s to at least have given us the out for the 2s 5s to make a bit of a move. Down goes bonds. Pretty easy to see that, guys, or not? Pretty clear? Or not? Pretty groovy? Or not? Yeah, it is pretty easy to see it, isn't it? So we can all recognize that if we're getting a steepener in the curve, we should be selling bonds. If we're getting a flattener in the curve, we should be buying bonds at the front end. That's the way it works, guys. That's the way it always has worked. Let's take a look at inflation break-evens. We talked about this yesterday, and we can see that we've been batting against inflation break-evens at the top edge, but not by much. You can see that from the bottom edge, the inflation break-evens were screaming long. Yes, everybody knew that, I assume. That's why the bond buy off these bottom edge pullbacks was a very, very obvious trade. You can't trade against inflation break-evens, guys, because this is the internal workings of the bond market. You can't trade against the internal workings of the bond market. So if inflation's going lower, your job is to go into and away from these trades. So when we start thinking about the other parts, let's take a look at the floating 10s. Let's take a look at the floating 10s here. Does anybody see the floating supply? Does anybody see the floating supply? Is that visible? Yeah, huge floating supply in bonds, isn't there? You can see there's floating demand in here from the there's floating demand in here from the 10s, the 10 notes. You can see the purple is very, very visibly above the blue on a relative value scale, so I should be able to buy lots and lots and lots of bonds. So obviously when this starts to move away from that and we start to see the purple line at the bottom, what does that mean? That means I'm buying 2ZN and selling 3ZN. Buying 2ZN and selling 3, so that means I've got a floating supply of ZN contracts if I'm going to trade this as an arbitrage. So to trade this as an arbitrage trade, pretty obvious, isn't it? To trade this as an arbitrage trade, I have to keep selling bonds at higher prices. That's how you trade this, guys. That's how you trade this. As an arbitrage trade, if I buy the purple line and I sell the blue accelerates away from the purple. So for me to trade this as an arbitrage, I've got to keep buying the purple. I've got to keep buying the purple. I've got to keep buying the purple. If I'm buying the purple, what am I doing? I'm selling ZN at higher prices, yes? So to trade this as an arbitrage, so that when it flips over, I make a lot of money, as a bond trader, I've got to keep selling bonds on upticks. I've got to sell bonds. That's how you trade this as an arbitrage. And you think to yourself, that's not arbitrage. Well, If you don't think that's arbitrage, you're kind of missing a little bit of a point about arbitrage. Arbitrage isn't price determined. It's determined by the relationship. The relationship between the purple and the blue line is an arbitrage. If you look at it from a relative value basis, it is a statistical arbitrage. It's not pure arbitrage, because you can obviously see that this is always going to be showing up here. Look at the relative value of that phase here. Look at the purple line first of all, and look at the blue line there. Do you all agree that the purple line is way above the blue line? So what's the relative value arbitrage in that trade? Buy the blue line? Yes, buy the blue line and sell the purple line. If I buy the blue line and I sell the purple line, what is my net position in treasuries? If I'm buying the blue line, I'm buying 3ZN. If I'm selling the blue line, I'm selling 2ZN. My net position in treasuries must be long treasuries. Long treasuries, what happens to treasuries? Straight up. Over the course of several hours. Straight up on treasuries, agreed? So that position was all long treasuries. And we got a massive ride north side on the back of those treasuries going higher. So what's happening right now? You can see what's happening right now. The blue line is taking over from the purple line, isn't it? Just the same way as the blue line took over from the purple line over this phase here, which gave us this massive supply line into the actual downswing here, that massive supply. Remember we did this in classroom yesterday, Kim? That was before the Fed. Do you agree with that? Does everybody agree we did this in classroom before the Fed yesterday? Not after the Fed, not after the big sell-off on the bond. We did this in classroom before. All of those words where we've got supply, supply, supply written up here, that's all in place before yesterday's Fed announcement. From the classroom, live, guys. And that's what happened there. We went from 197s to a low print down there eventually of about 193s. $4,000 lower from a live classroom that we did. Can't make it up, guys, because it's all recorded. It's all time-stamped. You'll see it for yourself if you look at it. So we called all of that supply up here. We called all of that supply, and then boom. And we got all of this demand down here. Boom. Supply into this phase here. Boom. Demand into this phase here. Boom. And now we're seeing supply coming into this phase here. And I have been consistent, steadily selling into that supply. And that's making me some money. Not a lot of money. But if we zoom in, we can see it's exactly what I'm seeing in this area here. You can see the supply visible. You can see the two different sets of information there. We've got demand in this place here. We've got demand showing up in that area there. And then in this area, it's all about the supply side again. It's all about the supply. It's just such a crazy good indicator, guys, when you suddenly realize. Now, it's not a sell and that's it. You can close your eyes and open your eyes in an hour's time and you'll have made money. You've got to work these, because this is a floating supply. It still has a directionality to it, but when you think about it, it is an arbitrage in terms of statistical arbitrage, the same way as the skew is. The lines will always flip round. They will always flip round. So we've got to remember that that is the case. We've got to keep working those orders to get into the right deal at the right price. Sometimes it goes, like when we saw that demand this morning, sometimes it goes straight off the bottom edges and it makes money almost immediately. But when we start switching to supply, when does it start? Well, usually it starts at a measure. Usually it starts at a level 2. Usually it starts at a wholesale price. Usually it starts when we see big volume starting to show up, which is why we need the volume story on the DV01s. Otherwise, it's probably not a trade. So when do we see the volume showing up? Well, the big volume starts to show up here, right there, doesn't it? But that's not at a high price, so that's not the trade. And then we get the bigger volume there. So that's the first trade right there. And then we see another big block of volume on an upticking phase here, don't we? A big, huge block of volume in an uptick phase. So we know that that's the start of the next phase right there. And obviously since then, we haven't really seen any volume. The volumes have actually dropped right off, simply because nobody's stupid enough to buy at those higher prices. They all know that there's a lot of supply in this. I mean, if you look at the difference between the purple line and the blue line here, the difference is marginal, because the blue line actually was retesting the prior lows. The purple line is a fair distance below the prior lows, but on the way back up, this direction is now right for us. The blue line should be rising when I'm trying to sell the highs. In this phase here, the blue line hasn't started to really rise yet, but the blue line rising here, the blue line was falling when that top edge was getting put in. That's not the best trade. The blue line should be rising. The knob spread should be going in the opposite direction. So when the blue line's rising, that's when I start thinking about the possibility of selling into those on a DV01 basis, because we're getting a curve change. We're getting a push on the curve, and that's what's opening up the DV01s here. And the wider the spread, the better the sell opportunity. And that's what we see happening here. We see the purple line making this consistent lower touch into this level here. All the while, the blue line is making higher highs, higher highs, higher highs. Brilliant. Buying into that higher price is the ZN, and that's going to keep the bond pushing higher. The bond keeps pushing higher. We sell into the bonds at the top edge, and we get that lovely roll off the highs. Make some pretty easy cash. We'll be getting started in classroom relatively soon, guys. It's just after 3 o'clock.